Hey, what's up? It's Chris, your favorite coach, your favorite host, all things favorite. If you don't have a favorite, why not let it be me? Well, you guys can't hear my music in the background. I'm back to doing these conversations with Chris. I just got back from a number of different places up north, Michigan, Illinois, Wisconsin, and I got to meet a lot of cool, interesting people, at least people that I find are interesting. And I'm here to share with you today my man, Aaron. He's a phenomenal mortgage guy from up there in Wisconsin, also happens to be licensed down here in Florida. And not only is he a cool guy, he's got some really cool things going on with the mortgage market and loan products. And I think that's a cool thing. And we're kind of all up in arms about that. So let's hear what he's got to say. What's up, my man, Aaron from Wisconsin, from Milwaukee. What's going on, buddy?
What's going on, Chris? Thanks for having me on.
Yeah, absolutely. It's a fun thing to do. Thanks for agreeing. It's not, sometimes people come and they agree to it, and then they're like, what questions are you going to ask me? Send them ahead of time. And I'm like, oh no, we don't really do that. We just this is a conversation that we would have over lunch or coffee or something, or better yet, cocktails, like how we met down there in a piano bar.
Absolutely.
And, it's just sometimes people have got really, and I'm like, man, people need to hear this. So tell us a little bit about yourself, man, how you got into the business, how you arrived at this point, and all the magic you're making out there in the world.
So interesting story. I actually joined the industry 20 years ago, just in the beginning of 2004. And I was in the industry for less than a year, to be quite honest. And it wasn't that I didn't enjoy it or it wasn't going well. What I didn't enjoy back then was the lack of regulation in the industry. And I'm going to leave names out of it, of who I worked for and what was going on back then, out of complete respect. But anybody that's seen the movie The Big Short, and heard about all the fraud and obviously saw what happened in 2007 into the early teens, knows that there was a real problem back then. Yeah. And I was seeing it as a new loan officer back then on a daily basis. And quite honestly, I couldn't sleep at night and started seeing what was really going on. So I left the industry for the better part of 15 years. Along that journey, my wife and I finally had started buying our rental property, something we had planned since before we had even met. And along the way, I would run our ROI formula. I'd run the numbers. And she was saying along the way, when she wanted me to kind of change careers again, you really should consider getting back in this. And I had like PTSD. I'm like, no, it's, I don't want to get back into that. I saw the way it operates. And she was a realtor for 10 years. And she's like, no, you always know when to guide people right. You just need to find the right company that operates the right way and aligns with your values. And if you do that, everything else will take care of itself. And that was really what kicked the door back open. So it's been going on 5 years now of getting back into the industry. And it feels like a lot longer than that, because it's been a very fast roller coaster ride in all the right ways.
Sure. Man, I remember getting into the business in the early 2000s there, and everyone could get a mortgage. And I didn't know in my early 20s that I'm like, man, how can you do these stated income deals with 106% owner financing? You get this poor person buying this, $600,000 house, living in the basement, renting everything out. I bought my house with one of these loans. I bought my first house when I was 24, 25 with a piggyback loan. That was kind of like that 80-15, and then that rate adjusted, man, on that first loan after 3 years. And if I wasn't in the business, my mortgage went from, being, $2,800 a month to like, $4,500 a month. And I know a lot of things happen. So how was that process of, because sometimes it kind of can feel dirty, like the mortgage business, the real estate business, the title business. And that's certainly kind of the bad taste that I had in my mouth over the years at different moments. But how did you arrive at the place where you struck that balance of, this is in alignment with who I am, and I'm able to help people and do things the right way and still be successful?
Well, you mentioned the 3-year adjustable rate mortgage, what you were alluding to there on your own. That's the only thing we were trained on. When I first interviewed with this company, when I was still in college at the time, on end of 2003, I had spoken to the district manager, a couple of the branch managers, and I hadn't owned a home yet. I was early 20s, and basically said, listen, I believe I can sell anything and consult on anything if it's something I feel comfortable using myself,
if you believe
comfortable and confident. And if I feel comfortable and confident consulting family members or friends on it. So, do you stand by your product? And I was naive. They confidently looked me in the eye and said, absolutely, 100%, we're the top of the food chain. All right. They might've been top of the food chain in terms of the amount of business they were doing and breaking certain goals and records and whatnot. But really what happened is I didn't even realize what was happening. Family and friends were like, "You're not you." And I was excited. The money was great. The trends of where it was going was great. And I started seeing things that just didn't make sense. And then I knew I had a couple clients that were on the verge of coming our way. And I went on vacation with with a handful of buddies for our kind of last hurrah out of college, and called our branch manager back, talked about a few of those deals, and they said, "Oh, they said they're going to shop around, so we definitely lost them." And I said, "Wait a minute, I thought we had the best product out there." They said, "Yeah, we say that to get you guys in." That was kind of a big one. That was just red blinking lights going off. And, then from there, I started actually seeing other signs where I heard our branch manager on the line with an appraiser saying, "Don't worry, I'll have the normal envelope waiting for you tonight when I see you next." And I knew this appraised up 20, 30 grand, whatever it was. This was in a smaller community up in the middle of Wisconsin, where at that time, 20 years ago, 20, 30 grand, it's a lot of money now. It was a lot of money back then, especially for what the percentage of the home was. And I want to say it was 1 or 2 days later, I came in and gave my notice. I just couldn't do it anymore.
Yeah. Yeah. I'm with you. I managed a mortgage company for a very short time. And I remember having a team of loan officers, and so they kept getting beat by people quoting cheaper rates. And I went to the guy that ran the bank, and I said, "Hey, these guys are all getting beat because they're getting quoted lower rates, and I don't know how they can do that because par rate is this. So with no points, they're quoting these rates cheaper. It's not, they're doing it for free. The bank's not making any money." Mm-hmm. And they said, "Well, just tell them we can do it. Lock them in at that rate, and then when our par rate drops, we'll lock them in, and then we'll make it on that." And I'm like, this doesn't feel right. So I know sometimes you just kind of feel dirty about it, but this is I think selling. Everybody needs to buy things, and real estate was always great because everyone has a real estate need. Man, mortgages. Everyone needs money at some point. So I think selling money is like a huge thing. So tell us about what's going on now with the market. You had some pretty cool loan products, and I was like, stuff that piques my interest. And I think where was I in Michigan? One of the things I taught was Beyond the Bank, kind of about creative financing, like using the outside the box lending strategies or borrowing strategies, right? So you've got some pretty cool stuff going on over there. What are you doing right now?
We do. So, first off, I never want to overlook that we do all the standard conventional products, FHA, VA, bank statement loans, DSCR loans. So basically investment loans. We do all of the standard stuff, some of the non-conventional, non-QM stuff. But we really look at the market as there's some challenges and there's quote unquote problems of what we hear from clients, we hear from other realtors, we even hear from other lenders, from other competitors. And we look at it as, okay, what are those real challenges? Number one, any buyer right now that also needs to sell, it's the whole chicken versus the egg. Do I sell first and then try to buy because I need the net proceeds and I can't afford both homes? If I do that, I don't find the new home because I'm hearing from all my friends, they're putting offers in, they're competing against 5, 10, 15 other offers. They're going 30, 40 grand over and they're still losing. Okay, well then we're going to try to buy the home with a home sale contingency. Well, now they're losing out because they're competing against 5, 10, 15 other offers. So there's a huge challenge there. And with that, we have a couple different products we're doing. Number one, a lot of places, a lot of banks, credit unions, other lenders are not doing these anymore. We're doing bridge loans. We have control over our bridge loans, being that we're funding them internally. So a bridge loan, basically we're dipping into a certain percentage of equity of their current home. I know you know this.
Yeah.
We're taking that equity and putting it towards the new home. With that, a lot of times now a client might say, well, once again, now I have 2 mortgages. Now I've got this bridge loan on top of both mortgages. This really doesn't make sense for me. So what we also have done is we're doing what we call A+ specials. It's an A+ portfolio loan where we will privately fund the new loan, especially if they truly can't afford it. Their debt to income ratio is out of whack. We will privately fund it internally. And so now they still have their current mortgage. Now they've got their new mortgage over here. The new mortgage over here, as long as we know they're going to sell their new mortgage, we have confirmation from the agent, pictures have been taken, everything's lined up. We won't even take a payment on the new mortgage for up to 6 months. We'll let it amortize. And then when they sell their current home, basically we'll get them caught up and we'll refinance them to the secondary market to the best rate available. A lot of times those things happen within 2 weeks to a couple of months because they don't want to sit on both homes. But we're literally finding a lot of clients. I can think of a dozen stories in the last year, if not more, for myself personally, where clients are getting into their new homes. They're like, my gosh, we thought this was going to be a 2, 3, 4 year gig on trying to time the market properly. Or we'd be moving over, time that didn't make sense for us to make it happen. So that's been a big one. Another one is I've given the example of 5, 10, 15 offers. The most I've heard in the last 3 years is 99 offers, just complete insanity. So with that, we are also offering a true cash offer program. No strings attached, basically just cash. We see a lot of them out there, and we see the fine print, or we'll hear people call it a cash offer, and then it'll say addendum on it, and it'll have all these different little outs if the appraisal doesn't come in perfect, or if something gets flagged with the basement needing beams or whatever it is. Ours doesn't have any red tape. Ours doesn't have any fine print. There are some qualifications, of course, so these products are not for every single client, but they are for a lot of clients. And when we say not for every client, what we talked about at the beginning of the conversation here is we're not into any type of predatory lending. We're into solution-based lending that's going to help clients achieve their goals and dreams where they feel like it otherwise cannot happen. So the way our cash offer works is it's not a pre-approval letter. It's not an approval letter at all. It's actually just a proof of funds letter. And yes, it does have our company name on it. So a listing agent might say, well, wait a minute. It says proof of funds, but it's got this other lender on it.
Yeah.
So we get on the horn with them and we explain exactly what we're doing, that we are backing this with cash, and the offer to purchase does still give the client the right to financing. So on that cash offer, if they want to try to get the loan before they close, we're not going to stop them. But if let's say something would come up with the appraisal or something else, we are fully prepared to fund that in cash privately between us and the client and deal with the steps that would need to take place afterwards. Let's say
it's still not mortgage. So that was a big thing. So you're basically guaranteeing it with your cash and then mortgaging it afterwards. So there's no mortgage contingency because that was the big thing.
Correct.
Okay, great.
Now, if a buyer
just fund the loan and then you take care of getting the mortgage after you're already funded with cash.
Absolutely.
That's cool. That's a cool program.
After or even during, like I know, I don't remember for Florida offhand, although I do lend down there. In Wisconsin, it's basically lines 302 through 307. It states right in there that cash offers do have a right to financing. So we might still do financing on the front end for the actual mortgage. And then it's just backed with cash. There is no pull the plug on our end whatsoever. So yeah,
that's awesome. Yeah, because I used to sell in Queens, New York. I used to work with a lot of co-ops, and co-ops. I had a sponsor that would only accept cash deals. The weird thing about that is now you have the most affordable kind of real estate where they're only accepting cash deals. So how does somebody buy something for $250,000 cash? That's, and I would have to do no mortgage contingency. So I would do cash deals, but still get mortgages. And in New York, and man, that's a tricky thing. You got to make sure it's going to close. So this is kind of, you already vetted it, you guarantee it. So you can fund it with cash if a appraisal comes back short or whatever happens. That's cool. And then you mentioned, I'm an investor. I was looking at these DSCR loans and all that kind of stuff, the bank statement loans. The interest rates were just through the roof. That's what I started getting into these owner financing deals now, because I'd rather get 4 or 5% in an owner financing deal than was paying at the time 8 or 9% on those investor loans. What types of investor products do you have, loan products, in addition to those? And what kind of rates are we looking at right now today? We're not going to hold you to that.
No. I mean, I can tell you last week I locked in 3 investors that have bought last year from me that are refinancing. They are, depending on the loan amount and a couple qualifiers, of course. We locked one at 6.625 on a refi.
Oh, nice.
We locked another at 7.125. Now those are Freddie Mac, Fannie Mae deals.
Okay.
So they already had, 25% down or 25% equity built up to be able to qualify for that.
So 75% is you have to have 75% loan to value max on those.
If it's a 2 to 4 unit, yes. If it's a single family, then it can go up to 85%.
Okay, cool. Yeah, I have condo. I have a condo that I use for short-term rental. I guess would be considered, so that would be for this program. It could go up to 85% loan to value.
Absolutely.
Yeah. So absolutely. I did owner financing, right? So I put 50% down. So our mortgage balance is, I guess, 160 something or whatever on a place that's worth, 3, right? Or like it's less than that, I think, on a place that's worth about 3. Now I'd be able to refinance with one of these loans at a 6.25% interest rate potentially.
6.625 is where I had it a week ago. So yes.
Yeah, and that's
What's
cool.
really
And
exciting.
these are Freddie Mac, and these are Freddie Mac. They're kind of all conforming.
Yes. What's really exciting about the what you just mentioned is, let's say somebody like yourself bought an investment property. It's a condo, bought it a couple of years ago. Home values have continued to go up. You put whatever money down at that time. Let's say it is worth 300,000 right now. If the equity has built to 60, where the home is now 60% loan to value, once we hit that 30% mark and then 40% mark of equity built up, basically at that point, there's different rules in terms of how the loans get priced, and we can typically even get a better rate yet. That's where I did have some of these clients in the mid sixes that I mentioned a week ago, versus if they had the minimum amount down, it might be a little bit higher yet. It all depends. And then obviously there's credit scores and other factors. But yes, so on refinancing right now, the beauty of the way the market's been and the way the home values have appreciated is there's a lot of flexibility of what can be done, especially for those that bought 1, 2, 3 years ago when the rate might have been mid sevens or higher in some cases.
Interesting, man. It's there's so many things out there, and it's people always that. I mean, we work with a lot of real estate agents, and sometimes these rates go up. Oh, the sky is falling. Rates are high, and the prices of the properties are high. That's kind of a unique market. I mean, I don't think I've seen this too much in my 20 something years in the business. But there's always banks are always innovating. And you've guys got you've got some, straight up conforming products. You've got some things that you've created, some portfolio products. What do you see futuristically? What's on the chopping block? What's kind of going to be created? These unique programs that you guys might be working on, or you might see in the future coming.
Ooh, that's a great question.
I mean, you need to make homes need to be affordable. I always say a buyer doesn't care about anything except how much they're paying per month, right? And that's kind of how everybody got sucked into these loans. Hey, we're giving you a 1% introductory rate, interest only, and like all those loans, those subprime loans. But to kind of create things to make it affordable for buyers and all that kind of stuff.
I can tell you one that it's been around. It's been around a long, long time. We do it right now when a home gets in the 1 million plus range, and maybe it's sitting where other homes aren't. Is the temporary buy downs that are not an adjustable rate mortgage that we talked about at the beginning. But instead it's a seller paid buy down. Typically seller paid, most of them are, where I had one a couple months ago. A buyer was moving from a different area for the same home here. The home was going to be $400,000 more to roughly get the same home. Wow. And that was going to push them out of their comfort zone. So this home had been sitting for a little bit. We did a 3-2-1 seller paid buy down. So where the rate would have been, call it 7%, that first year it was 4%. And that's where they're at right now. The second year is 5%. The third year goes to 6%. And the cost to do this sits in an escrow. So let's say rates at some point in the next year do come down to the mid fives, maybe better. I can tell you they're going to refinance. That's the plan. Well, the money that was paid from the seller to do this program is sitting in an escrow. Whatever's left, they get to use upon refinancing. So at that point, let's say the rate's at mid fives, we already have the plan that we're going to take it and do a permanent buy down and try to get them closer to 5 or even under at that time. So it's not necessarily new, but I think as the market levels a little more and homes in certain areas do start sitting a little more, I'm already talking to a lot of my partners in the industry that, why are you going to drop it 50 grand? Why not offer a 3-2-1 buy down? The cost on that is generally 4.5% of the mortgage amount. So even on $1 million home, that's going to cost 45 grand on the high end, assuming they were doing 100% financing, which they're not. So it's probably going to cost more like 30 to 40 grand after their down payment because it's of the mortgage amount. And now we know that if rates were at 4%, that same home would have a buyer right now. Now it's not a long-term buy down. We're not trying to manipulate that at all. But there's been a lot of forecasts that the rates likely should go down at some point. I never like to give a timeline because there's just too many factors. And the Fed has done a good enough job of giving timelines that they've not stuck to in terms of where the rates might go. So, and a lot of the different analysts that like to overpromise. But over time, I do think it's going to trend that direction.
That's a cool thing, and the rate buy downs. It's we saw a lot of that when these prices started going through the roof and the rates at the same time started really getting up there. And I mean, I was always tell I was tell all my clients, I said, hey, instead of your seller coming to you and saying, hey, let's drop the price $10,000, it doesn't make any sense. On a $600,000, $700,000 house, it doesn't really do much in terms of stirring up activity. But now, if you can market a house, instead of taking that $10,000 and drop the price, have the seller be willing to buy down the rate for a buyer. Now you can market what their payment's going to be. Hey, own this house for $2,500 a month. Well, I don't care what the price is now, but what's happening on the back end is different. You know what I mean? I've got agents that are clients that work with buyers that charge retainer fees to the buyer, sign them as a buyer client, and then use that retainer fee actually towards a rate buy down. It's a really, really smart thing to do. So you're seeing a lot of that, and now you're seeing a lot of that kind of in the market where you're at.
Oh, we're time of year. I would say we do. We definitely see it over the winter season up here.
Okay.
I always like to say, like, we get to Halloween, and the moment Halloween hits, naturally people start looking forward to the next calendar event, which is, of course, Thanksgiving, followed by Christmas, New Year's. And up here in Wisconsin, that's when snow is on the ground. And I think it's probably much more than just up here, though, where we know business slows in Florida as well, for us, where, my saying is always, it's the least convenient time of the year to buy, but it's the most opportunistic.
Sure.
So that's on the buyer side. On the seller side, that's generally where we're partnering with a lot of the builders in the area and some of the agents in the area that have some of these homes that are 600, 700, 800 or more, where we're putting flyers together, putting literature together. And as you said, marketing it as your payment starts at this for year one, this for year two, and then goes to this for year three and beyond. And being fully transparent, having the APR and everything listed on it properly, of course. But that's been a huge selling point for some of these to move product. And on the other side, I'm coaching clients that, you can sit and wait till the spring market and go right back to competing with 10, 15, 20 other offers, buy the same home for 30, 40 grand more, or shop right now. Yeah, it's not convenient. Yeah, nobody wants to move a week or two before or after Christmas. But it's, if you're going to get that type of deal, what a great Christmas gift to yourself.
Sure. And, some people get tax benefits closing by the end of the year. I mean, we have 4 seasons in New York. Well, I guess it's kind of 2 seasons now. There's fall and spring seem to be disappearing slowly. But I remember when there was snow on the ground and I was primarily a listing agent, you have a lot of people kind of at the end of the year that I want to put my house in the market come January, come the new year, or I want to wait till the spring to put my house in the market. And I always would say, look, there's less competition. There's less competition in the wintertime, like around the holidays, but the people that come out are freaking serious buyers, and quite often they want to buy. So on both ends of that, it's great that there's mortgage advantages like attached to that would make people want to kind of get into a home before the end of the year or over the winter, as and it's also motivation for a seller to want to put their house in the market. It's always been a thing. So is there anything I'm not asking you that you want to share with everybody today?
We could go a million different directions. I know we started going down the health path when we chatted at the piano bar. I know we started talking a little bit about daily disciplines and yearly disciplines and structure and different things that way. There's a lot of ways we could go, but I don't know if we need to or not. So
yeah, it's up to you, man. This is your time, man, and what you want to share. I mean, thanks for sharing all this mortgage magic you're producing out there in the world. So it's exciting to see what you got coming. And you're licensed in Wisconsin and Florida.
Correct.
That's cool. And are you? I mean, why? Is it because a lot of people from Wisconsin are moving to Florida?
That's a big part of it, but the other realistic part of it is the president of our company and one of our founders lives in Florida. So naturally, he was going to start originating down there. And at that point, basically somebody I used to work with was buying in Florida, buying down in Key West, and they were not licensed down there. They had the ability to, and they realized the pricing was completely out of whack, both in terms of fees and in terms of rate. So our company doesn't do branches. We literally just have our corporate, and it's a much smaller corporate than most. And we've got our loan officer team. Why that's important is most companies, and I really mean 95+% of them, from banks to other mortgage lenders, they'll typically have branches in the middle. So they have a third level that they have to pay. They have to pay to keep the lights on. They have to pay for the front desk help or processor help of that third level or whatever it is. And then they have a branch manager that wants to get a cut in addition to their origination. We don't do that. So our fees and rates are generally in line with some of the most competitive credit unions, at least in this area. with that, anyway, I ended up looking and I said, why aren't you talking to our president, Pete? So he did. And he ended up going through our company, which was the wise thing to do. And he's like, yeah, the rate was, half point lower. Fees were a lot better. And that's where the light bulb went on of, well, why am I not following my own advice? I should be licensed down there, even if I'm helping a handful of people a year, which is in all reality probably kind of where I'm at, because I'm not marketing down there. It's more organic.
Yeah.
But yes, that's really kind of how it started and how I got down there.
I mean, it's because you got these, particularly for investors. I have a client, she's an agent, and I kind of turned her on to this owner financing stuff. She works with investors that do wholesaling and all this kinds of stuff. And I mean, connect and some of the products that you have would be like, agents down here would be all over that, and I'm sure there's all kinds of, everybody's got the things that they do, but there's the products and then there's the people, right? So it's, the mortgage company that's got great products, but are the people great? And it's always nice. Human beings are human beings. And they want to work with other human beings that are like them, that they connect with. And that's one of the things that I appreciate about you. You're a good human being, which, not to say that it's rare in the mortgage industry, but somebody that's kind of not so economically driven, chasing to shovel more money into their bank account at any cost. And that's I come across that a lot. And it's certainly a breath of fresh air to meet people like yourself.
I appreciate it. I will withhold my opinion on that.
Yeah, I get you. Well, it's I'm very I kind of got strong opinions. I've been doing this for a while, so it's like and it's funny you're saying about the fees and the costs, because I got a buddy that's a branch manager, and he when I was sharing an office with him, and he was charging, he makes 75 bips on a deal, right? And I was like, man, he's like, listen, he's like, I do the right thing. He's like, I've got returning customers. He's like, so I make a little bit less than some of these other mortgage guys per transaction. He's like, but I'm set up like a well-oiled machine. I give people great deals and they keep coming back and refer me all their people. And he's extremely busy, so I think there's something to that, to just kind of saying, I'm going to kind of, I'm just going to kind of set up a system where I'm going to have a stream of wonderful people to work with and give them a good deal and keep them coming back for more, and all their friends and family.
I think there's a lot of good companies out there, and your friend that you're talking about probably out-services a lot of the competition and probably does a fantastic job. And, I think it depends on the market. When the market was 3-4 years ago and rates were 2.5% to 3.5%, most people were like, oh my gosh, my rate's 3%. They don't care if they can go down the road and get 2.5. They know that they got 3%. It feels like free money in a sense. Now it's changed a little bit, and I think different areas and different professionals can factor in. Our company is unique that we only have about 20 loan officers, and we've not gone on this massive recruiting campaign. But strangely, out of that, and of the 20, a handful of them are even somewhat part-time. So of the 15 truly committed full-timers, we have 5 that fell in that top 1% range last year in terms of production, which just, to me, showcased the people that we work with. And it's more quality over quantity. And, especially in little old Wisconsin, I like to say, granted, there's a lot of real estate changing hands up here. But, it's a testament. And I know one of my best friends who did leave went to one of those bigger branches, and he was doing all right. He wasn't unhappy. And we finally said, all right, you were promised your business is going to more or less double by going there. We know that hasn't happened. It's time to come home. And he did. And we're not perfect. I'm not saying we are, but his business went to his best month of the year immediately. 10 loans in the pipeline within a month.
That's great.
He hadn't seen that in over a year for himself.
That's great. And it's, there's a butt for every seat, and there's a company for everybody. And everyone's different. That's cool. So that for everyone to find the place where they belong. Let me ask you this. On the lead generation side, I mean, there's a lot of different strategies, for realtors, for mortgage loan officers. Where does a lot of your business come from? Are you realtor centric? Are you adding value to realtors and working with brokers, or are you like direct to consumer, internet leads, referral? Like, where's most of your business come from? What's that look like?
I've tried some of the direct to consumer. I've tried a couple different programs. We might co-sponsor, we do co-sponsor in a couple of those. I'm not going to say it's our focus. I would say it's heavily on just the reputation we have in the market with the realtor community up here. And that's grown, far beyond just the greater Milwaukee area to Green Bay, to Appleton, to Northern Wisconsin, where a listing agent might work with us and love how we operated and love the quick turn times that we can do, and, love the communication and getting things ahead of time. So it's heavy on that side. We definitely, like I'm part of a couple different chamber of commerce groups and a couple business groups. So those have been good to me. And then repeat business from past clients and referrals from past clients definitely is a decent, good percentage of it, especially obviously the longer anyone's doing this. But more than anything, it's the reputation within the realtor community and a vast majority of them coming back to us.
Oh, that's awesome. So what types of things do you do? Do you co-market with your realtors and brokers? Do you do co-marketing? Do you do events with them? What kinds of things do you do to kind of work with them as a team and build that business?
We will do co-sponsoring. We've done that with a few different ones. We're always open to anybody on having that dialogue. It doesn't mean we're always going to move forward.
Yeah.
Because obviously there's limited budgets. We definitely have done different events in terms of co-sponsoring on client appreciation events, different gratitude types events, different things that might bring people in and gain visibility. I got to be honest, my favorite type of event is more educational based events.
Sure.
In a variety of ways. I feel like there's just a huge gap in this industry. I know you're a coach and speaker and add a tremendous amount of value. And I got that from you immediately upon meeting you at the piano bar there. But we've done different events that are more growth oriented to help the realtor grow.
Okay.
How to grow their business, how to do yearly and monthly goal setting, how to execute on that goal setting. If they're in a certain level, even things like, are they an S Corp, which so many of them don't know why they should do that and how much money they can keep in their pocket. If they're investors, educating them about cost seg, if you're keeping and the tax benefits of that for them on how they can keep more of their money legally. And, from there, there's obviously a whole slew on the business side on how they can grow their business. We can grow our business with them in all the right ways. So those are my personal favorite types of events.
Yeah, it's funny. I'm just putting together. This is coming up soon. I got a business planning coming up soon. It's going to be launched, and I'm glad you mentioned that. It's pretty cool because there's not a lot of people that are committed to education. I think everybody, the more that they know, it's like, how do you've got all these great things going on, all these great programs. Now, a lot of times a realtor is the first person that they talk to. So how do they properly articulate that? And I think if you can kind of when mortgage companies host training for realtors, and they could kind of blend it together and incorporate everything and saying, hey, here's how you have your conversations with your buyers, with your sellers, even on, on how is this valuable to your buyer and seller pool, and how do you get that word out there? I think that's tremendously valuable. And I'm glad that you guys are doing that stuff. That's awesome.
Absolutely.
Do you have anything coming up you want to mention? I put the link here in just to you on your mortgage page here. So it's got your social media links on it, your phone number, your email, everything kind of in one place. But is there anything else you wanted to share? Any events you've got coming up? Any links I could post here?
We don't have ours scheduled yet, but we will be getting it scheduled here soon. We'll be doing our 2025 Living Your Best Year Ever series.
Nice.
It's our start of the year goal setting. That is really, yes, I believe that there needs to be outcome goals and there needs to be behavioral goals. And the outcome is the big shiny trophy at the corner of the room, but the behavioral goals really indicate and shape who you are. And that's far more important in my opinion. I believe it. I've learned it years ago in a different industry that, any type of entrepreneur, we live in an inconsistent world. So how do we bring consistency to an inconsistent world? So that series is a huge step in that. And there's different checkpoints. And I need to check yours out a little more as well, because I'm a constant lifelong learner. But that's going to be a big one. We certainly have different gratitude events that are just open to the industry as a whole. We're going to get some fun stuff on the books for that. I know last year we did a really fun dueling piano outing. Nice. Different than from where we met each other, but
that was only one piano. He wasn't dueling with himself. It was just kind of like one piano, but
so we got some stuff coming, but it's not on the calendar yet.
That's cool. Well, it's, if somebody wants to connect with you, if somebody in Wisconsin wants to, one of the realtors, they want to get on your list or something, they can just reach out to you and you'll be able to communicate with them when you've got these cool things coming up.
Absolutely.
Awesome, man. And maybe we'll do something together in the future too. I don't have anything on the books going back to Wisconsin, but I'm on the ground for the rest of the year. It seems like it'll be fun. I've got all these other things going on. Everything's virtual nowadays. I mean, we can look. I'm in Palm Beach. You're in Milwaukee. We can have a conversation like this live, and bring in all these other people to join us from around the world. So it's a pretty cool thing. We like it. So thank you, Aaron. Thank you so much for sharing this stuff today. I put your link here, and you could, if you're on Facebook or YouTube or LinkedIn, wherever you are, you'll be able to have access to that. If anybody has any questions, they can just reach out to you. I know you're easy to get in touch with. You're very responsive, and that's another thing that I appreciate about you as well. Just there's in our industry, it's kind of not everybody is so attentive and present.
That's baffling to me. Homes drop in the market on a Thursday. You have a short window for your clients. We need to be accessible and available.
That's awesome. Yeah, perfect. Thank you so much for joining us today, man. And we're looking forward to seeing all the magic that you can produce in the future. And we'll look for those events as you have them scheduled. I'm sure you're going to post them out there and put them out there to invite people as they come along.
Absolutely. Thank you so much, Chris.
Thanks, bud. Take care.
You too.